Jeff is employed as an engineer and also owns an investment property. He initially lodged his tax return on the 1st of September. On the 15th of September, he was issued a notice of assessment together with a refund. However, due to a minor audit, Jeff received an amended assessment on the 1st of December, increasing his taxable income and tax payable. This was due to the ATO's interpretation of a recent case, which led to the ATO denying some of Jeff's investment property deductions. Jeff was also charged penalties by the ATO for his tax shortfall. Jeff does not agree with the amended assessment and is keen to find out what options are now available to him. When a taxpayer is dissatisfied with the decision of the ATO, generally the first course of action is to lodge a formal objection with the ATO. In general, a taxpayer cannot get an external review for their decision, such as from the Administrative Appeals Tribunal or AAT, until the ATO objection procedure is complete. Objections can be lodged against a number of ATO decisions. Most importantly, a taxpayer can lodge an objection against the ATO's assessment or amended assessment. Others include objecting against a private ruling, a decision by the ATO to retain funds owed to the taxpayer, the ATO's determination, and a decision ordering the taxpayer to pay penalties. The time limit that the taxpayer has to lodge an objection will depend on the nature of the objection. For objections against income tax assessments, the time limit for most taxpayers is 2 years from the date of assessment. For amended income tax assessments, the time limit will be the later of 2 dates. For most taxpayers, these dates are 60 days from when the amended assessment was served on the taxpayer and 2 years from when the original assessment was served on the taxpayer. For both an assessment and amended assessment, the 2-year time limit will be extended to 4 years for taxpayers carrying on a business, either directly or through a partnership or trust, where a taxpayer does not qualify as a small or medium business entity. Upon the objection being lodged, the Commissioner should make a decision within 60 days. If there is no decision made within this time limit, the taxpayer can give notice to the Commissioner that a decision be made. If no decision is made within 60 days of such notice, then the objection will be deemed to have been disallowed. In Jeff's case, he will have to lodge his objection by the end of 2 years from the 15th of September, being the date he received the original notice of assessment. If the ATO replied to Jeff within 60 days and disallowed his objection, what could Jeff do? A taxpayer that is dissatisfied with the outcome of their ATO objection has a number of possible options. Alternative dispute resolution, or ADR, where an impartial person helps to resolve the issues, is often applied first. If ADR processes are unsuccessful, the issue may be heard in the AAT or the federal court. The AAT is generally less formal and cheaper than the federal court. Also, the AAT can step into the shoes of the Commissioner and exercise the Commissioner's discretions differently, whereas the federal court can only decide on questions of law. Note that, in general, legal costs from the unsuccessful to the successful party are not awarded in the AAT, but can be awarded in the federal court. In Jeff's case, as the matter involved the impact of recent case law, this would be considered a matter of law. As a result, this could be decided by the AAT or the federal court. However, his application for remission of penalties, on the assumption that the deduction issue is not decided in his favour, concerns an exercise of discretion rather than a question of law. As a result, the AAT would be the best body to seek review if Jeff wanted a reconsideration of the ATO's penalty decision. A taxpayer that has a matter reviewed by the AAT and is unhappy with the decision can appeal to the federal court, but only on a matter of law. A single judge federal court decision might have been made as the first review of the ATO's decision, or it might have been made due to the appeal of the AAT decision. Either way, the initial federal court decision can be appealed to the full federal court, but only on matters of law. Decisions made by the full federal court can be appealed to the High Court of Australia, but this is only allowed where leave is given. This is not often the case. To recap, the first step to a disagreement with the ATO's findings is to go through the objection process. Taxpayers have a time limit in which to lodge an objection, and this depends on the type of taxpayer and the nature of the objection. If unhappy with the result, the taxpayer can seek review under the ADR processes or from the AAT or Federal Court. AAT or Federal Court decisions can then be subject to appeal to the full Federal Court on matters of law only, and then to the High Court, in very limited situations and only where special leave is granted.